What's going on, everyone? We need to take a little bit of caution this week as the SPY enters a level of critical resistance, and I'm going to be going over that and kind of teaching you guys based on technical analysis, supply and demand, as to what exactly it is that I'm talking about here. So if we look at the S&P 500 as a whole, today we did only close down 42 cents, which is nothing. This is minuscule. This is just a blip, right? Pretty much you could say that the SPYs finished flat today. Okay, that's not the real concern. The concern is that where we closed and where we got rejected today. Now, this doesn't mean that we're going all the way back down to the bottom. This does not mean that the world is coming to an end, like a lot of fear mongers and people on social media like to say. I'm a realist. I'm going to spit it to you guys very straight. So with that being said, the reason why I say we need to be a little bit more cautious this week and kind of wait for those confirmations, or kind of potentially look for a short setup for a day trade, or maybe an overnight swing trade, is because look at the top resistance where we came into. This line of resistance is called the linear regression channel 50. I use these on every single one of my charts, and it really is going to help you kind of identify and pinpoint those spots as to potentially where those macro levels of support and demand are at, right? So if we are supply and demand are at. So if we look at the last time that we came into this area, it's going all the way back to January, February, right? So look at the exact date here, February the 2nd. If you guys want to pull that up on your chart, that was the last time we had a big run up coming where, guys? All the way from the bottom of the channel. So if we look at this consolidation and this distribution period here that lasted 1 2 3 4 5 6 7 8 9 10 11 12, almost 3 trading weeks the last time this happened, going all the way back to December and January, right? So if we look at December the 16th all the way in here to around January the 9th, we had a ton of distribution where we were trying to find support before we finally exploded to the top of the range and put in a high price of 418. Now, if we look at what happened when we got rejected the last time we came into this zone, we came where? All the way back down to the initial level that we built up this floor. Okay, only this time we did not put in a new low. Okay, so anytime we do not put in a new low, you have to automatically give the bulls the benefit of the doubt for a potential bounce, which is exactly what's happened and exactly what has been going on here since the date of around March the 10th. We've put in a phenomenal move back up where? Again, to the top of the zone. So as we come in and we approach this critical level here, we need to be a little bit more cautious. If you guys are holding calls, make sure to kind of clean up those profits, hold a runner just in case we do decide to break down, but do not be trying to jump in long and trying to guess, that this is just going to go on a full-on breakout. If it does go on a full-on breakout, we will definitely get that information confirmed before we actually have to just jump and dive in blindfolded, right? So what we would need to happen is we would need to break through this channel, put in a new high, and then either back test or confirm that new high, and then that is when we are going to go long, is on the breakout of the confirmation of the new high above this channel. Now, we could be pulling back here again to the middle of the range just to consolidate before we do breakout. Again, that's going to be completely fine. No harm, no foul. What we need to look at going forward into this week for all day traders is that if we do start to take out today's lows, which is going to lose this, kind of upper resistance that we've had here around that 415.85 level, anything below 415, we've got room all the way down to 412, 411. That's your short position. You want to make sure you take profits before then, just so you guys do not get bounced out of your position. Okay, do not get bounced out of your position or get trapped because you think that you top tick the top and the market's going down 100 points. Just take your 2, 3, 4 points, collect it, put it in the bank, wait for the next setup. We really bulls are still in control until we start to lose 402. 402.55 is the level that I'm looking at here. As long as we're trading above 402, the bulls are still in control. All I'm looking for is scalps to the downside. I'm not looking for any macro moves. Scalps to the downside. I'm not looking for any macro moves until we lose the 50-day moving average. Now, the big level, if we are going to come back down here again for a third time and test this bottom absolute macro demand zone, we're going to need to give up 395, which is a 200-day moving average. We're going to need to get below 393, and then potentially we've got room to come down to 379. This is exactly how you read supply and demand, guys. Trust technical analysis, trust the charts, forget about what you think is going to happen or what you think should happen, and just follow accordingly. If the move that you get into does not go in the manner or the favor that you want, just get out of the trade. There is no harm, there is no foul. You don't have to hit a home run. You don't have to be right 100% of the time. You only need to be right 4, 5, 6 times out of 10 to be a profitable and consistent trader. I know traders personally who have a 30% hit rate, meaning that they only win 3 out of 10 trades and they're still profitable. Why? Because those other 7 trades are very, 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 very small losses, and those 3 winners are very big winners. Why? Because they're playing bigger levels of supply and demand. Again, if you guys want to learn more, check the links down in my description box below, but I wanted to kind of update everyone before tomorrow happens, so that way we don't get a bunch of traders trying to buy long, because right now I can start to see that a lot of traders are starting to get excited. Everyone's starting to funnel in, and when that happens, boom, we get a nice pullback into support, which necessarily doesn't mean that it's a bad thing. It doesn't mean like we're going down, but what happens is they kind of shake out those traders. They take that liquidity and then they rally right after they get everyone out. So again, wanted to forewarn everyone and let you guys know what's going on the charts. Again, I'll see you guys next time. Make sure to like, comment, and subscribe, and also join evolutiontraders.com, the Discord. All of that stuff's down in the description box below, and I'll catch you guys all next time.